You are listening to Uranium Spotlight, your weekly podcast on the forces shaping the global uranium fuel market, sponsored by Purepoint Uranium Group. Uranium Spotlight isn't just a podcast, it's a platform. Visit purepoint.ca to access in-depth market briefings, sector analysis, and the inaugural Behind the Curve report, understanding when and how the uranium market turns. If uranium matters to you, you're in the right place. And now, your host, Chris Frostad.
It's June 23rd, 2026, and this week on Uranium Spotlight, the spot price moves higher despite light summer trading. Kazatomprom reinforces production discipline, Saskatchewan strengthens nuclear ties with Poland, and Purepoint begins summer drilling at Dorado. The uranium spot price opened last week at $84.95 a pound U3O8 and closed Friday at $85.90, up 95 cents in the week. On the surface, it was not an especially active market. Spot activity slowed as the usual summer pause began to set in, with some market participants already moving into vacation mode and others watching broader geopolitical risks. But the important point is that even with limited formal interest, prices still moved higher. The week began with two spot transactions on Monday, which lifted the blended price to $85.85 a pound. Tuesday was quiet, with no reported transactions and no price movement. Wednesday brought a couple of transactions before the daily price cutoff, but pricing remained flat. Thursday was again quiet. Then on Friday, fresh demand entered the market, and two additional deals were completed for Cameco delivery, first at $85.75 and then at $85.95 a pound. In total, only 6 spot transactions were confirmed for the week, involving 700,000 pounds U3O8. Of that total, 5 transactions represented 500,000 pounds were for prompt delivery within the 0 to 3 month window. One additional transaction was for delivery just outside the prompt window. The term market was more active beneath the surface. A U.S. utility entered the market seeking up to 400,000 pounds U3O8 for delivery in 2028, 2030, and 2032. A non-U.S. utility is seeking roughly 500,000 pounds a year from 2027 through 2031. Another U.S. utility is evaluating offers for up to 1.4 million pounds starting in 2028. Several additional utilities remain active through requests for information or quiet off-market discussions. For investors, the key takeaway is that the spot market remains well supported even during a seasonal slowdown. A nearly $1 price increase on light volume suggests sellers are not aggressively chasing bids, while the term market continues to show utilities looking for longer-dated coverage. Kazatomprom CEO gave an interview last week with Mining.com's Eric Groves, and the message from the world's largest uranium producer was important for investors. Asked about production discipline versus market share, Kazatomprom has followed a value-over-volume strategy since its 2018 initial public offering, and that the company intends to continue that approach. That matters because Kazatomprom is not just another producer, it's the largest supplier in the uranium market, and its production decisions influence expectations across the entire industry. If the largest producer were focused on market share, investors would have to worry about additional pounds being pushed into the market to cap prices. Instead, Kazatomprom is saying the opposite. It does not want to flood the market with cheap uranium. The CEO also said that the company is not overly concerned with market share and welcomes new entrants into the uranium market. His point was that demand is expected to rise fast enough that there should be room for new production. That is a very different tone from the last uranium cycle, when producers often competed for volume in a weak market. Today, the largest producer is signaling discipline and also acknowledging that the market will need additional supply. The second major point from the interview was customer behavior. The CEO described steadily increasing demand from Asia, especially China, which he called the largest growing market. He also highlighted India, which has extremely ambitious nuclear goals, including a target of 100 gigawatts of nuclear capacity by 2047. That's roughly equivalent to 100 large conventional reactors. He also pointed to the United Arab Emirates and its South Korean-built reactors at Barakah, and to Saudi Arabia, which continues to evaluate nuclear development. The CEO made an interesting distinction between Eastern and Western customers. Eastern customers, he said, are less price-sensitive and tend to think decades ahead. Western customers, by contrast, are more price-sensitive, partly because they have long-established nuclear fleets and have been buying uranium for decades. That distinction is important. It suggests that the next wave of demand may not behave the way traditional Western utility demand behaved in the past. New nuclear countries, or rapidly expanding nuclear countries, may be more focused on securing of supply than on squeezing out the lowest possible price. That's exactly what a tightening uranium market looks like. The question shifts from what is the cheapest pound to can I secure the pounds I need from an acceptable origin on a timeline that matches my reactor build-out. The CEO also said that there's been a sweeping change in interest in nuclear energy and uranium products around the world. Demand is not rising in one region alone, it's rising across Asia, the Middle East, and established Western markets. For investors, this matters because Kazatomprom is effectively confirming two of the most important themes in uranium: disciplined supply and durable demand growth. When the largest supplier says it does not intend to flood the market and also says demand is rising everywhere, that is a constructive signal for uranium prices and for companies with credible future supply. Saskatchewan and Poland signed a nuclear cooperation agreement last week focused on workforce development, supply chain opportunities, research, and broader cooperation in nuclear development. The agreement connects one of the world's most important uranium-producing regions with a country that is moving seriously into nuclear power. Saskatchewan Premier Scott Moe said that the province is proud to partner with Poland as both sides work to strengthen energy security, support innovation, and build the skilled workforce needed for the future. He described the agreement as a shared commitment to collaboration in nuclear development, research, training, and supply chain opportunities. Polish officials used similar language, saying that the agreement is part of a broader effort to protect the environment, support the energy transition, and build cooperation around nuclear energy. He emphasized human resources, education, science, professional collaboration, research, innovation, and the development of small modular reactor infrastructure in Poland and Canada. That last point is important. Poland is not only pursuing large reactor development, but it's also looking at small modular reactors, industrial applications, and regional energy security. Saskatchewan, meanwhile, sits at the front end of the nuclear fuel cycle. It has uranium, mining expertise, technical talent, and an established nuclear supply chain. Cameco CEO Tim Gitzel also welcomed the agreement, saying Cameco is pleased to see Saskatchewan and Poland work together as both jurisdictions explore clean, reliable nuclear energy. He noted that nuclear is a global business built on collaboration, knowledge sharing, trade relationships, and supply chain opportunities. The Saskatchewan government also emphasized that sustainable clean energy begins in Saskatchewan, pointing to the province's large, high-quality uranium deposits and its role in supporting global energy security. For Poland, this agreement fits into a much larger nuclear strategy. The country is advancing its first large-scale nuclear power plant and is also attracting interest from multiple reactor and small modular reactor vendors. That creates demand not only for technology, but for training, regulatory expertise, fuel supply, construction support, and long-term supply chain relationships. For Saskatchewan, this is another example of uranium moving from commodity storage to strategic relationship. The province is not simply selling pounds. It's positioning itself as a nuclear partner to countries that are building long-term energy systems. That's also where the comparison with the United States becomes interesting. The U.S. has been talking aggressively about nuclear energy and fuel security, but has not moved with the same speed in securing global uranium partnerships. Domestic U.S. uranium production has improved, but it remains far below the level needed to supply the existing reactor fleet, let alone any major nuclear expansion. At prices near $100 a pound, U.S. uranium reserves would cover only a limited portion of long-term reactor requirements. Even to meet near-term needs, U.S. production would have to rise by an extraordinary amount. That makes international partnerships unavoidable. Saskatchewan appears to understand that. Poland appears to understand that. And investors should watch these agreements carefully because they show how nuclear fuel security is becoming a diplomatic and industrial strategy, not just a mining issue. For investors, this matters because uranium-producing jurisdictions with politically stable, high-grade resources and established mining expertise are becoming more valuable. Saskatchewan is not only a source of supply, it is becoming a part of the strategic architecture of nuclear growth. Purepoint Uranium announced last week that summer drilling has begun at the Dorado project, the flagship asset of its 50-50 joint venture with IsoEnergy in Saskatchewan's Athabasca Basin. The program is designed to build on the high-grade Nova discovery where previous drilling returned assays of up to 8.1% U3O8 and to find a 1-kilometer structural corridor hosting radioactivity that remains open along strike, at depth, and toward the unconformity. 7 drill holes totaling approximately 3,150 meters are planned through July and August. The first objective is to continue advancing the Nova discovery. The winter drill program significantly improved Purepoint's understanding of the Nova system, tracing uranium mineralization across a 1-kilometer structural corridor and refining the geological model for follow-up drilling. The current program is designed to test the interpreted plunge of the mineralized structure and evaluate its projected extension toward the unconformity. In practical terms, Purepoint is trying to vector towards the core of the system. That's the right exploration question at this stage. Nova is no longer just a geophysical target or an isolated drill result. It's a mineralized corridor with high-grade assays, strong radioactivity, and room to expand. The next step is to understand where the system strengthens and whether it connects upward toward the unconformity, which is where many of the Athabasca Basin's best uranium deposits are found. The second objective is to test additional high-priority conductive targets across the broader Dorado land package. The project covers more than 89,000 hectares in the eastern Athabasca Basin, surrounded by world-class uranium deposits, including IsoEnergy's Hurricane deposit. Purepoint's also recently completed an airborne mobile MT geophysical survey over Dorado, and those results will be integrated into ongoing interpretation and future drill targeting. The winter program intersected radioactivity above 500 counts per second in all 9 drill holes and recorded a peak downhole gamma reading of 73,100 counts per second. Assays from the winter program remain pending. For investors, the key takeaway is this. Dorado has moved into the stage where each drill program should either improve the geological model, extend the mineralized footprint, or help vector towards higher-grade zones. The summer program is not random exploration. It's a focused follow-up on a high-grade discovery in a proven uranium district backed by a major uranium partner. If drilling confirms continuity, strengthens the plunge model, or moves the system closer to the unconformity, Dorado could become a much more important discovery story within the Athabasca Basin.
You've been listening to Uranium Spotlight, your weekly podcast dedicated to the latest developments shaping the uranium fuel market and its role in the global energy landscape, sponsored by Purepoint Uranium Group. While our passion for the sector is undeniable, nothing discussed here should be considered investment advice. Our mission is to provide a clear, balanced view of the forces influencing uranium prices and the nuclear fuel cycle. For deeper analysis and market briefings, visit purepoint.ca. Join us again next Tuesday for another edition of Uranium Spotlight.